AMD will be reporting earnings after hours today, October 31st, in about 1 hour, since it is 3 p.m. now. And so we wanted to go over our trade strategy based on the most updated data on unusual options activity. This morning we went over the data from yesterday that was bearish. However, the data currently is showing some bullish options. As you can see on the options time and sales tape, we have 3,250 97 strike call options being bought. This was $350 each. And when you calculate the value of this trade, you can see here that this is also about $1 million, which is the bearish options that we went over this morning, these puts. We can also see that there were also some other trades as well, such as this 2,000 here, which is also a bullish trade, $230 each. Now we also see some bearish trades, such as this trade here at the 27 mark, which is this trade together, buying the 95 strike puts and selling the 75 strike puts in a ratio of 1:2. So that's a bearish trade there. Okay. We also notice here this trade is also a bearish trade for the December 2025s. Okay. So the way we traded this, because there is a mix of bullish and bearish options data, is we have a mix where we are skewing our trades in one direction, but we are hedging the other direction. So the way we did this is that for each of our trades, we sold the 104 strike calls, 2 of them, and bought the 102 calls, and we bought the 105 calls to create a butterfly trade. And so you can see this is our bullish trade here, and we added our hedge here at the 90 strike puts, selling 2, buying 89 strike puts, 1, and 92 strike puts. You can see that this costs about $26 each. This is also a butterfly trade. So we have here basically a double butterfly trade. 2 butterflies. The date currently October 31. So this is what the trade looks like. However, we are going to skew bullish, so we added a ratio. So this is a double butterfly trade at a ratio of 2:1. So for every of our bullish butterfly trades here, we had 2 for every 1 of the bearish butterfly trades. And so what that does, as you can see here on the profit loss diagram, AMD at $98, you can see that as we go up in price, if AMD trades and rallies up, this will be profitable. And if we go down, you can see that it reduces our potential risk and loss here. Essentially very near zero here, because you can see the blue line here is actually very close to zero, so that we're not losing very much if AMD drops significantly down. In fact, if it drops around 90 here, this area here, it's actually profitable. This is above that zero line here. Okay, so the cost of this trade, because we bought 2 of these, that would be $80 here. You have to multiply by 2 here, plus 26. So that's about 106 per trade here. Okay, and so that is why when we mouse over the bottom here, the max loss is 106 on the blue line. You can see that on the left side. 106 is the max loss because that's the amount of debit for this entire trade here. And so this is our trade going into earnings for AMD, where we want to hedge our downside based on the data that we are seeing from yesterday and today. Okay. So comment below, what do you think will happen? Again, because this is an earnings trade, we do not put a lot of capital into trading earnings because they are not as accurate as our non-earnings trades where we pick stocks that do not have such high risk events, so we can increase the probability of profit for our portfolio as a whole. If you are interested in our member-only trades, consider joining our membership by clicking the join button on our channel homepage. And please smash that like button and subscribe if you haven't. Hit the bell icon and you'll be notified of further unusual options activity. Thank you, and hope everybody has a great day. Take care.